Welcome. This time today I want to give you a short overview of how cycles have guided us through these pandemic crisis during February, March and April of this year. So it would be interesting to know if cycles could have given us some kind of information during these crises ahead of time, and what the standard cycle analysis would have shown us just now, going back in time and checking how the cycles look like. So let's go through some key data sets. For that, let's start with the S&P 500 and let's see how the situation looked like. To start our analysis, so this is the current data set and let's use the S&P 500. But to start our analysis, let's go back to a point in time before the crisis, the pandemic crisis happened. To do that, let's just quickly look up the point in time. So here, it's February 14th. I think all these virus topics have not reached Europe and have not reached the US. So if you can think back about the mid of February, we have not been aware of what will come up and show up here. So if we go back to this point in time here on the price chart for the S&P, the 14th of February would be right here at this point in time. So what we can do now, we can anchor our analysis with this click here to that point in time. So that we change now the in-sample period to the 14th of February. I will press the refresh button to update the cycle analysis, which means that the cycle analyzer just knows the data up to the 14th of February. So the dark blue line here, this is what's known to the analyzer. The light blue data is just visualized, but it is not used for cycle analysis. So this would be exactly the situation if we have opened the chart at the 14th of February, not known what virus pandemic will reach us in some weeks ahead. So let's check the cycles at this given point in time here. So on the right hand side, we see the current active cycles, which have been detected by the cycle analyzer. So it shows you the current active cycle length, the amplitude strength, and the battle score. So at this point in time, the long-term cycle, just going down now from the top here with the standard analyze, not customizing anything. So let's pull up the cycle with a length of 178 bars on the chart. So this cycle here shows just from the past. Let's check the alignment. So this is a high, a low, a high, low, a high, sideways, and then an up. So this cycle with a length of 178 bars has a good alignment in the past. And at this point of our analysis here, so just going to this point here, is showing us that the long-term cycle here, end of January, beginning of February, has now rolled over. So the longer-term cycle, which has been active, showed already the peak end of last year and has rolled over now to the downside from a longer term perspective. So this would be an early warning that on the 14th of February that we might approach a kind of period which will lead us into a down move into the beginning of February here. So this at least is an early warning sign here. We can also scroll it a little bit down to the spectrum chart. So this is the histogram, and it shows a clear peak of the cycle with a length of 178 bars. Just to explain, it's not just a basic spectrum, it also shows you some cycle feature extractions here. So it's not only the length from the classic spectrogram, it also shows you the Bartle's value. With a Bartle's value of 90 means high Bartle's value shows you that it's not a cycle by just based on single events. It's a static real cycle which seems to be active, and the cycle strength is the relative score based on the amplitude change per bar. So a higher strength would mean it's more interesting from bar to bar from the time series, and the current phase is showing us that the downtrend is starting. This is all shown here in the spectrogram which can be used then to fine-tune a little bit the cycle here. So the next thing which might be interesting is the shorter term perspective. So we see from the longer term perspective, cycles have rolled over, and just keep in mind at this point in time we have not been aware of the crisis that will show ahead. So this is the long-term cycle, and the clear peak shows this cycle here is active. Then if we move to some shorter term cycles here, which might be interesting, it's more case, so the cycle with the length of 55, this has also a green Bartle score, and I think it's for 56, what is it, 56, yeah, righty. It's shown here in the dashboard, and I'm picking this one because of the high Bartle's value here, good strength value, and just picking this value here. It's just a little bit fine-tuning, okay, but it's more or less confirming the longer term perspective here. I would not pick these cycles here as they might show up here just in the list. But if you check in the spectrogram, the difference to the amplitude peak is quite high, and they have a real low Bartle score, and the strength is even small, so you can see it from the just small arrows here. So the larger the arrow, the higher the strength, and the color of the arrow gives you an indication about the Bartle score. So I would mainly pick this one here, maybe also this one here, but if you do both, activate both cycles, you will see that at least for now we are prone now to a turn down at the 14th of February here. So these are the longer term cycles which point to a low here. So what I always say, never trust just one data set if you do some cycle analysis. So therefore, if we want the major finance situation, it's always important to analyze kind of sentiment data set. So therefore, let's now pull up the same situation as it would have been shown up on kind of sentiment index, and I like the volatility index here, which is a kind of fear index, also known as fear index. So let's pull up the volatility index. Let's also use a point in time before the crisis started. So we will align our analysis here, or bring the data back to the 14th of February. So kind of time shift here. So this is the volatility index at the 14th of February here. So maybe just pulling up some data here that it looks nice. We need to go back. What's the 14th of February? Here. So update. Okay. So this is now, and the cycles have updated here on the right hand side. So this is the cycle analysis at the 14th of February for the volatility index here on the chart. So we do the same analysis. We can scroll down to the spectrum and see the cycles which might be interesting here. So this is interesting. We see the same cycle length here with a length of 178 bars. Just remember, it's the same cycle which have been detected in the S&P index. And then the other cycles here also seem of interest because it's a clear, sharp peak in the data set. So clear peaks show that's interesting from a cycle point analysis. And this is here cycle length with 104 bars, which is also showing up. So if we go from the most two important cycles here, let's pick these two cycles here. They also show up here on the top list here. They have high amplitude, good strength value, and good Bartle scores here. So let's activate those cycles here. Let's start with this one. So just aligning to see if they align with the past here. So this is the longer term cycle. You see here we have a low, high in the volatility, a low, high in the volatility, low and high in the volatility. So this looks quite good. And we have here similar situation. The sentiment cycles point to a similar low in the volatility index. The reading of the volatility index cycles is vice versa price. So a low in the volatility index would correspond then to a high in the price index. So low A low fear value means, okay, the price is booming and will turn, and a high level of fear will indicate, okay, we have arrived at a market low. So the reading is just the opposite. So, okay, this is the longer term cycle. But in addition, what's interesting here, we also have the cycle with a length of 104, which is valid to use for the analysis. A green triangle, a good strength value, and a clear sharp peak in the spectrogram. So we will also use this one here, activate this one. And what's now important here is for sure the projection at the point in time we're doing this analysis. So let's now scroll over. And this, I mean, the picture speaks more than I could explain here. But from the point of the analysis here, we have done here. So we have done this analysis on the 14th of February. So just to summarize, this is how the chart and the cycle analysis would have looked like at the 14th of March on your dashboard here. And just using the standard setup here. So I've not customized anything. These are the cycle detection algorithms which work here for over 20 years. And just picking the top two ones out of the list, I mean, that's not much to do. All the heavy mathematics with Fourier analysis and cycle and frequency analysis has been done in the background and just shown up here. So, but going back to what we want to showcase, the initial question was, would cycles have given us an early warning before the crisis happened and before the market turned down? And you have seen two clearly indications, so that by going back before the corona and virus crisis, we had one long-term cycle shown on the S&P, which shown already in January, beginning of February. The long-term cycle rolled over and you could expect a downturn into May. And the volatility index here showed the same, now picking two active dominant cycles, which showed us we should expect a downturn with the volatility peak around 24th of March. So this would indicate here we would expect a downturn going into the 24th of March and expect maybe a first low here 24th of March. So let's now maybe move back to the S&P and see or put this into perspective now. If we just reopen the S&P 500 chart. So let's go back to the 14th of February and just remember the sentiment volatility index predicted at the 14th of February. So at this point in time here, a possible market low. Remember, I think it was 24th of March. So, and this is what happened. So I think we have not seen these on just picking the long-term cycle, but the 104, the cycle with a length of 104, which was not visible here. If we just do the same analysis here, align it to the 14th of February, update the cycle analysis. So this is what is shown here, and the sentiment cycle showed us to expect a low volatility high here. So this was forecasted. I mean, it was forecasted to see a major drop, and it was forecasted to maybe expect a low 24th of March. I think if you would have seen these before the corona crisis, so the cycles here again show us that cycle have a leading indicator. They are not a lagging indicator. So this is always what makes cycle analysis interesting, that cycles give us a window into the future upfront as a leading indicator. For sure, you have to analyze if they are valid, if they work, if you can confirm the same cycle in related data sets to make sure that your cycle analysis is valid, and you just pick one cycle and go ahead. But this is exactly an example how you do the cycle analysis, and if you find these kind of situations which have been there. By the way, I have published this analysis upfront in public media, so this is not something I have now picked up just to showcase. I've written an article on our blog here on February of 13th. It's titled "The Importance of Cycles in Predicting Future Turning Points." I'm using also other data sets here, so I'm starting with weather data sets just to explain it. But I did the exact example I showed you here. So I did the analysis of the VIX already here with the exact outlook here, which I just showed you now. So this was published ahead of time for the sentiment data. I made an analysis of the S&P just using Linear Trader with the cycle analysis on also beginning of February, which showed the long-term cycle rolling over in the S&P. And just to add, and might be interesting to read, I also did an analysis of the Amazon stock index here. And yeah, if you just look at these data here, I found a similar cycle here and clearly showed a peak in the Amazon stock cycle at this point in time, also predicting a major high. So this was published at the beginning of February in a public blog article, and this was also republished in the Traders magazine for, I think it was the issue here for March, April, May, so from the Traders World magazine, in a printed article in the Traders World magazine. So it's really proven that this analysis was done before the corona crisis and before the crash occurred. So the cycles I'm showing you here is nothing really after the fact. This was anyhow published before the fact. But I think from a learning perspective, I just want to show you how to do this. But let's add another example on top of this, because it was really funny. Once you saw the price drop, let's say here for the first, after the first 10 or 15% of the market drop, let's refresh our analysis here. So let's now go to this point in time here. I think the first just turned out in the present, say, okay, now this is a good buy opportunity. So this would be then the same point in time where you should look at the cycle analysis and check, can this be confirmed? I mean, you know, from the longer term cycles, it's maybe not a point to buy, but cycle analysis, it's important. You update your cycle analysis from time to time. Never follow a static cycle forecast just for weeks without refreshing it. So this would be a point in time. I mean, we don't know if the market will go down more, or this might be a good buying opportunity. So the cycle analysis is already updated. Let's check the spectrogram here. So in this case, the longer term cycle is still active with a phase of downtrend neutral. So the longer term cycle does not show that we have a bottom here. So we are still in the downtrend phase. The next cycles, which are important now, if you go from the spectrogram here, you could skip these ones, red triangle, very small triangle. These two cycles now show up here as clear peaks with a big green triangle. We can also zoom in here a little bit on the chart to show these two peaks here. So clear and nice peaks, one with a length of 50-50 bars and another one with the length of 51. So I think you will also see these cycles here in the list. Yeah, these are these two ones. So we will skip the longer term one because I've shown this one already. The next two lines can be skipped based on the low Bartels value here and here. So I think you have seen this on the red triangle down below. Never choose cycles for prediction which have a low Bartels value. And then the next one with a good Bartels value, a good strength, are the ones with a length of 51 and the length of 55. So you can even pick each one individually. So you see there they point more to a similar perspective. This one here is pointing to a low mid-March, and the 55 is pointing to a low end of March. You would also then use the composite cycle because these two cycles are active, and now have a look what this cycle is showing you here. And keep in mind this analysis was done with data on the 27th of February. So this is how your cycle analysis would have looked if you have pulled up the cycle analyzer on the date of the 27th of February. So a lot of people now got out and say, okay, this is a good buying opportunity after the drop of over 10% of the market. The longer term cycle anyhow showed us, no, it's more downtrend we are in now. But this is now the interesting, if you know, scale down to shorter term cycles, which might be interesting. I mean, important is you need to find important ones. But this is how I showed you here down below. These two stand out here as the next shorter term ones, which could be used because, remember, green triangle, a big triangle, good strength, and a clear peak. So skip the light blue ones with small triangles and small red triangles. Don't use them for cycle prediction. The next one coming in here are these ones, and they can be used because they have large green triangles. So, and activating these triangles, I mean, even the picture here speaks for themselves. On the 27th of February, the cycles would have predicted a kind of market low here around 1920s of March. So doing the cycle analysis, you would have not used this drop after these 10% here as a buying opportunity. You would wait for the cycles, hopefully signaling the bottom here in mid-March. And do you remember, if you go back in the video analysis, I showed you even in the 14th of February that the sentiment cycles predicted a fear peak, so a peak in the fear index around the 27th of March, so, or 24, I think, yeah, at this point in time here. So if you combine now the analysis, the 14th of February showed us a fear peak, which should be a market low around 27th of March, already in February, and now the updated price cycle on 27th of February showed us that the shorter term price cycles might bottom around 20 March. You would have a clear cycles within cycles and cross market validation that by 20 to 27th of March you could expect, from a financial perspective, the markets at least to have an interim low, which could be a buying opportunity. And you see how it played out. I mean, the light blue curve is not known by the analyst here. So yeah, that's how cycle analysis work. And this is a very good February-March period where cycles really showed their strengths. Why is it? Because first of all, the market drop was not caused by the pandemic crisis. The market drop was mainly driven by the cycles which have turned down anyhow. So the steep drop here was mainly caused then maybe by the coronavirus, but the markets will turn anyhow have been predicted by the cycles. And I think I showed you how to use cycle analysis, how these just basic use case works, and it works even very good if you have a very emotional markets, which was this kind of period here. And if markets go emotional, and if sentiment comes into play, and if the VIX index shows you the similar cycles which you can see on the price data, these are very interesting periods where often cycles show that they work. Keep in mind, cycles are not magic. They do not work always. You need to confirm if cycles are active. But I think if you see this video, I've shown you some ways how to analyze if cycles are valid or not. And I think I showed you that yes, the answer is cycle has given us very interesting information maneuvering through these financial crises, which from the press is called a pandemic crisis. But I think cycles gave a clear leading indication upfront, mid of February, end of February, what you could expect going on in the markets here. If you're interested and maybe you read some of these examples, I would invite you to read this article I published anyhow before all the mess happened here, or go back to the Traders magazine just to show and prove this was all published ahead of time. Thanks for watching, and yeah, happy cycle analysis.